In this video, traders, we're going to look at trading with dynamic support and resistance. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so dynamic support and resistance, a subtle difference to static support and resistance. Going to run through some examples of both in a second, but also kind of adding hopefully more value to the video by suggesting a way that we can use both to add more weight to the trade. So combining the dynamic and static aspects of support and resistance, blending them together to create a more powerful trade idea. This video, by the way, guys, is sponsored by, you're in the market for a new broker, in the market to change broker, looking for an additional broker, go and check them out. CFDs, SpreadBet, MT4, MT5, my personal favorite is CTrader. Good combination, a good variety of markets, should I say, obviously regulated, well respected, well regarded, award winning, all that good stuff. You know, we're kind of pleased to have them as a sponsor and a partner. So go and check them out, guys. But this video is really focused on trying to get a bit more weight to the trade. If you trade off support and resistance, if you trade on intraday basis, trade on a swing trade basis, you're probably pretty good at drawing the support and resistance lines, aren't you? You're probably good at getting key levels, working them out. And then when the market's coming to that level, it's a case of, am I buying this? Am I looking for a breakout, a fake out? How am I trading that? But that's by the by. Let's look at dynamic, let's look at static. So dynamic is something obviously that's changing over time. So things like a trend line or a moving average is a dynamic support and resistance level. You think about a trend line, let's just kind of do one here. If that's a lower trend line, but that's always changing. As time goes, it's changing. So it's constantly moving. And same with the upper trend line as well. A moving average, the same type of thing. You know, it's always moving with prices, price updates and moving average updates. Except, I know one of you is going to comment and say, well, if we're in a range bound condition and we're stagnant, the moving average will be flat. Yes, you're quite right. Under some circumstances, you might get a flat moving average, but it's still going to be changing very, very slightly. So we've got trend lines, moving averages. There's some examples of a dynamic support and resistance. Now, I think I probably talked about this before. I'm not a huge fan of using those on their own. Now, there's a specific trading strategy that I do use a moving average for, but because they're dynamic, you kind of think that not everyone's looking at them. If you look at the static ones, like a prior swing level, prior high, for example, or prior low, everyone knows what the yesterday's high was in cable, who's trading cable. Everyone knows what the yesterday's high was in Tesla, if you're trading Tesla. It's something that's well known. Not everyone knows this trend line because, again, it depends how you draw it as well. Some people kind of draw it on these, some people draw it on the wicks of the candle, some people draw it on the body, some people like to extrapolate. So there's always a bit of ambiguity when it comes to some of these. And the same moving average, use a 21, 20 period, 19, 18, EMA, SMA, you get the idea. Whereas these are, you know, definitive, they're definite, is not moving. Price swing high is this, price swing low is this, prior close for a gap fill is this. A key level, again, there might be some variety, but if it's hit this kind of high multiple times, it's going to be about the same level. Everyone's looking at that. So let's look at a kind of scenario where we've got the two blended together. So imagine here, we've got a kind of uptrend in this stock and we've got a significant key level. Imagine that was the prior day's high. This is an intraday chart, 5-minute chart, prior day's high. We've broken through that high and it's now become support. So you've got a couple of mount tests of support. It was a prior level as well. Resistance turns into support, that game we're playing. And you've got a moving average here. Let's say it's a 20 period or something like this, pushing up. Now, you've got a dynamic support. Often people are trading off a moving average, a bounce, touch a moving average and bounce, and you've got this static support level. So the power comes in when you get this, sometimes you can get a sweet spot where they both combine and they're both offering an extra bit of force for the trade. And that sweet spot, as you probably spotted, guys, is going to be here. You know, it's where the price is holding at that static support level, that key level here, the prior high that we had here, the level that tagged before, and the moving average, the dynamic support level is pushing up and helping price then give a little bit of a shove as well. So you've got not only the static, but you've got the dynamic. So when you see those two combined, and of course you've got your price action in the candle, if you like trading that type of thing, then you add much more weight to the trade. You know, at the very least, you're probably far less likely to just go short there. You're probably far more likely to think, okay, it's pushed up, pulled back, it's holding at my key level, it's broken out, it's pulled back. That's a classical play in itself. Now the moving average has caught up, time has kind of gone by, we're accepting this level a bit more, and we're above my key level. That might be a kind of a trigger for you to get long. You know, you might even, when it pulls back here, you might say, let me wait and see that moving average catch up to price, because as that moving average catch up to price, that might be the catalyst for me to go. And then you just wait a little bit more because it might dip below. And so adding these dynamic and static support and resistance levels together can make you be a bit more patient, add a bit more weight to the trade, give you a little bit more confidence to pull the trigger on that trade, maybe create a little bit more better stop positioning, because you can kind of go, okay, well maybe I use a lower Bollinger Band because my moving average is there, or maybe I use a kind of a maximum distance between the high and the dynamic, any kind of these kind of things, MACD type of thing, loads of things you can do to utilize the power of these things. So it's worth looking at, guys. You know, trend lines is, again, if you had a kind of trend line that's eventually catching up with it, let's imagine we had, you have to forgive me a little bit my drawing, imagine we had this type of thing and our trend line was here, and then we had that static dynamic catch up as well. You could play off that. Anyway guys, trading with dynamic support and resistance, keep your risk managed, take care, do check out below. See you next one, bye bye.